everyone. Thank you for joining us once again for our briefing here at Seafried and Brew. I am Jamie Sumner, Chief Analyst, and for this briefing we want to look at some of the numbers that had come out last week, focusing on that second estimate of the GDP for the first quarter 2018, and then also taking a look at what the employment situation was, and then rounding that out with that inflation number that came out last Thursday, looking at that core PCE. So overall, when we look at the second estimate for the first quarter 2018 GDP, we can see it came in at 2.2%. That's just 0.1% below where it was originally at. So it did decline, met expectations though, and we can see as we look at some of the numbers, very little adjustments in terms of the contributions from each of the different sectors. So no real big push in here. The only thing, probably the biggest news, was that investment section where we saw the inventories number kind of back off a little bit. Didn't go negative, but it wasn't as strong, or it wasn't as contributing as much as initially anticipated. So we'll continue to look at those inventory numbers to see how it's going to come out with that third estimate. When we're looking at the jobs report, we had a pretty good number come out, 233,000 jobs created last month, and that's positive, especially when we look at the types of jobs, very diversified here. We continue to see construction adding jobs, adding 25,000 jobs when back in May, and then we look at the healthcare industry also continuing to add those jobs. But overall, we had a pretty broad base of the types of jobs created, and that's what we continue to want to see as we move forward throughout 2018. In terms of the average hourly earnings, we're a little ahead of expectations. It came in at plus 0.3 on the month-to-month change. The consensus was 0.2, so we were a little better. But when we look year over year, we met consensus at that 2.7. We still have yet to see that big, robust change in those average hourly earnings. We would anticipate, as we're down here in this unemployment rate, that competition, that pressure to push up that with those wages would be prevalent. It just is not prevalent yet. Speaking of that unemployment rate, we dropped down. Now we're at 3.8%, down from 3.9% back in April, and that March, where we were consistently for several months at 4.1%. So we continue to move down, and the bigger positive though in my mind is the fact that the U6 moved down 0.2% from 7.8 down to 7.6. So we continue to see that spread between the U6 and the U3 condense and get smaller and smaller, getting back to historical averages, and that's what we want to continue to see. Perhaps when that happens, we'll really start to see that push up in that wage inflation. Speaking of inflation, let's look at that core PCE. It came out at that 0.2% for the main PCE, and that met expectations or consensus of 0.2 when we look month over month changes. Now the core PCE also came in at 0.2, but that was 0.1% higher than that consensus of 0.1. So we saw a little bit more inflation than anticipated on that core side. But overall, when we look year over year, we can see the trend came down just a little bit from 0.9, the revised number 0.9, to 0.8 or 1.8 today for the May number. So we came down ever so slightly in here. But that's showing the inflation really not an issue, not pushing the envelope right now, and still beginning to build that argument that the Fed might not have to raise rates. And in my mind, and here at Seafried and Brew, we believe that they would be fine of just keeping the Fed funds rate where it is. However, the market is still projecting a very high level of probability that in the next meeting in June, they will increase that Fed funds rate another 25 basis points. But we'll look forward to see what they have when they come out with that in a couple of weeks. Well, that's what we have for you this week. We look forward to speaking with you again. Have a great week, everyone.